Friends, in this video for ithought Advisor, I am going to talk to you on the topic how we see this market fall. As professionals, we often hear this thing often, and we may also often say this, that every market fall is an opportunity. But there is definitely a lot of difference between every market fall. When the market falls 5% from an extreme peak, that's probably a much lesser opportunity than when the market falls the last 10% to reach a bottom. But technically both are falls. In both instances the market fell. So saying that every fall is an opportunity is technically right. But as an investor who is listening to that view, you have to understand that the impact which every opportunity can give us if we invest money in them is different. So every fall is technically quite different. How a fall can be making a difference to your investing, that is what should be an investor's focus. But most of us get anchored to benchmarks and watermarks. These two things are almost having an obsessive influence in our mind. So for us, the peak of a market is a benchmark, and for many of us, the peak value in our portfolio or in the index is a watermark. So if we beat that, then we think we have done great. Or we think the market has become cheap, or our portfolio valuation has become cheap if it falls significantly from that benchmark and watermark. Neither statement is cast in truth, because each situation is different, each portfolio is different. The valuation of your investments can be very different from valuation of benchmarks, and you need to have a very focused bottom-up approach in ascertaining how favorable investing in a particular fall can be to you. Naturally, more than the extent of the fall, the power of your ideas, the valuations at which you are going to buy them, and the manner in which you are going to deploy money during this fall is very, very critical. And this applies to every single fall. The market has fallen. It will probably fall a little more. But the question you need to ask yourself is, where do you want to invest? Do you want to invest in a place where the market has fallen but stocks are still expensive? Or do you want to invest in a place where the market has fallen, the stocks have fallen more, and in the near future, these stocks which you are looking at have a better performing potential than the broader market? As an advisor, as an investment manager, or as an investor, one has to take the same view. And that view is based on how we are measuring opportunity, not how we are measuring benchmarks. To me, this market looks extremely polarized even now. Whatever is in favor, ideas, themes, stocks which are liked by a lot of influential voices, are still very, very expensive. On the contrary, whatever is out of favor looks to be more promising in terms of future potential. So we have a very polarized market. Fancied names and over-owned stocks still look expensive. Under-owned teams and stocks look very, very attractively valued, and this market still gives a lot of opportunity to bet on such names. If the valuation of what you want to buy is not oriented towards overpaying and buying what is still expensive, and identifying where valuation is in favor, offering adequate potential on the upside, then your investing is clearly seeing opportunity in this fall and seeing it correctly. Whether you are investing in a stock, an ETF or in a mutual fund or in a PMS, you have to be sure that the philosophy of investing followed in each is oriented towards identifying the potential correctly, measuring the opportunity correctly. Then the fall is a meaningful opportunity for you to invest more money right now, and if it becomes even sharper. So the extent of the fall can increase, but the opportunity only will get better. So where you are investing is very, very critical. It becomes all the more critical as the markets fall even more from here, because if you invest in the wrong places and if you do it early, then as the markets fall further, your anxiety levels are going to go up. Whereas if you invest where valuation is in favor and that valuation becomes even more in your favor, then you are more confident to invest in those parts of the market. As a market participant, that's all I want to do, and that's all I want every person whose thought process I am able to influence to do. So all our effort is oriented towards achieving this, and if we are able to consistently achieve this in our individual investment, in our investment choices in mutual funds, in how we give advice to our clients, and how we manage portfolios in a PMS, then the purpose of our work becomes more meaningful, and we would have used the fall productively and result orientedly. And that is all we want to do as market participants. So I want you to be conscious of what is being done, where it is being done, and how it is being done. And if you feel that the market opportunity is in your favor, you should buy into it. And if you are advised that the market opportunity is in favor, just make sure the valuations are also in your favor and growth is visible. If you have all these things in your favor, then invest consistently in a disciplined way to build portfolios during this fall and during every fall. Thank you for watching this video.